Hey everyone, we've had a wonderful start to the week where the Magnificent Seven stocks are almost all up significantly. Nvidia is kind of deciding whether it's going to go up massively. It went up somewhat, nothing big. I think the hot streak of Nvidia is calming down, and the other Magnificent Seven stocks are catching up. There's two big reasons why the Magnificent Seven are outperforming the smaller stocks like the Russell 2000 that you've been told to invest in, but just keep going sideways and really don't go anywhere. The number one reason is artificial intelligence. These are the biggest creators and users of artificial intelligence. The second reason is they're not really affected by inflation. In fact, they benefit from inflation. The Magnificent Seven companies have massive piles of cash, and they benefit from the interest rates where they collect billions of dollars in interest. So the fear with the Magnificent Seven is not inflation, it is recession. And though we have softening signs that the economy's going down somewhat, we look like we're entering a soft landing. And I think the only reason this is possible is artificial intelligence. A soft landing has never really been accomplished in the past. History is against it, okay? So most people are expecting some kind of recession eventually. But I think artificial intelligence is reducing that landing from a crash landing where we crash and burn into a softer landing. Over diversification can actually be a problem because what you're setting yourself up to do is you'll end up doing what the average market is doing, okay? And you want to do better than average, or at least I want to do better than average. I want to pick the very best stocks, and by going with the seven magnificent stocks, I am going with the very best stocks focused on the major industrial revolution of our times, artificial intelligence. But the amazing thing is it does as well as TQQQ, which is what I've used to day trade. But, it's usually for short-term trades because it's a leveraged fund. MAGS is not leveraged. Which I think makes it safer. And you have some diversification because it's seven companies. It's not one stock. Like you're not pouring all in to NVIDIA, although NVIDIA is part of it, which is one of the reasons I'm kind of cooling off on NVIDIA because I think it's going to try to settle for a while before it goes forward. Looking at the chart, you can see that the Round Hill Magnificent 7 ETF has done almost as well as the TQQQ, the triple leverage fund on the 100 largest companies on the NASDAQ. And I think it's because you've selected the very best seven stocks of those 100 companies that the TQQQ uses. The TQQQ has gone up almost 50%, while the MAGS has gone up about 38% since the beginning of the year. It did this in spite of TQQQ being triple leveraged. Charlie Munger, before he died, said that you go with diversification for safety, and that's why it's appealing to most people. You do that for safety. But concentration brings you wealth, okay? So you get the safety of it not being triple leverage, and you get almost the same effect as having the TQQQ. So I like that. You have some diversification, but you have a significant concentration in artificial intelligence, which is where the action is, which is why we might actually make it through all this without a recession. Thanks for listening.